Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about how the markets really move and book, because there is still a lot of confusion with this. I see people arguing about the fact that, hey, the market moves looking for order blocks to mitigate, to do this, to do that, and that's all well and good, but there is the main reason why the markets move up and move down. And what a better idea than actually taking a look at this FOMC event that took place yesterday at the time of this recording, and actually explaining why the market did what it did. When we look at the FOMC event, this was the release, and this bearish candle was the press conference that happens after the event. We're going to be talking about how the markets really behave and move, and we're going to be using a trade idea example that I shared with everybody in my mentorship. I will play a snippet of a Zoom session that we hosted pre-FOMC, outlining the possibility of Euro-USD pushing up to clear buy side liquidity. And do not worry, we're going to be getting into it a little bit later, but I did outline the idea of Euro-USD moving up to grab buy side liquidity in order to push down with the press conference. So I gave the direction and the timing of it. Okay, now with all that being said, if this sounds like something you're interested in, make sure you stick to the entire video, because I'm going to be trying my best to provide you with valuable knowledge and information. So without any further ado, let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good, and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video. And now into today's lesson. Enjoy the video. So traders, here we are back on the charts, and as we said, we're going to be discussing the idea of buy side and sell side liquidity. Okay, this is the most important concept that you will learn in trading, and this applies to every market. It is the reason why the markets move. When the market is moving up, and this is the first thing that you have to write down and understand, when the market is moving up, it's looking for buy side liquidity to capture, and when the market is moving down, it's looking for sell side liquidity to capture. Okay, very, very important concept, very important idea. Now, before we get into the actual explanation, what I'm going to do now is play you the clip of the Zoom session that was hosted with the members in my community, outlining the Euro-USD idea, so that you know that we discussed this ahead of time, and then we'll resume going over what exactly happened. Okay, so you will see right now the Zoom clip playing. So at this point, I don't think there's nothing that you should be doing. I will be looking for this potential sell side to be cleared. We do have sell side liquidity resting over there. We have buy side liquidity above this. We're still in the middle. We haven't really moved much from daily candle open. We can see that we have ATR periods still untouched. And what I would want to see, obviously, for FOMC is any rejection or grab of sell side or either buy side liquidity, I'm going to be taking the opposite direction, which is what I have done these past 4 FOMCs. But do not worry, we're going to be getting into that once we're done with the analysis. For now, we're focusing on Euro USD. And as far as we can see, Euro USD has reacted of a major higher time frame level, which could very well lead into a potential new lower low on the higher time frame, which is right down over there. Okay, so that's something that we have to consider. Now, will this just keep dropping right now just as it is? I do not think so. More so, we will be looking for the clearing of the pools. If we can drive up with FOMC, we can look for buy side liquidity being cleared. We can then look for rejections on the lower time frame, and then we can look to take a sell. That's going to be the plan for me as of now. Obviously, if price initially with FOMC does the opposite and moves down, then we'll have to look for the opposite. I'll have to look for sell side liquidity being cleared, whether it is below this low or this low. And I'm going to be looking for rejections to take the opposite direction. That's all that I'm going to do for Euro USD today. As of now, I would not advise taking any trades because the market is likely to range and it's not really going to move well. So you are playing with fire at that point, okay? So now you've watched it, right? Now you've seen what we outlined. We spoke about the idea of, with FOMC, price moving up to grab buy side liquidity. Now, why is that? And it is of crucial importance to understand. Well, first of all, let's zoom into the 15-minute. Let's actually take a look at the day that FOMC had in price. Okay, when we look at it, we're looking at it from a 15-minute perspective. We can see the following thing happening. This is when the day begins. Where is it exactly? Right over here with this bullish candle. This is the opening price. We can label this as the opening price of the day right over here, and we're going to make sure we adjust this properly. What do? We expand further up on the Asian range, drop down right at London Open, 8 a.m. We grab the Asian high. What else do? We clear buy side liquidity. Okay, this is something that you have to be keeping in mind always. Whenever you're looking for price to reverse, more often than not, it is not going to reverse until buy side liquidity has been cleared. So if you're looking for sells in any market, and this applies to everything, you want to see buy side liquidity being captured first. Only after buy side liquidity has been captured, you can think about taking a trade in the opposite direction, right? So we see the Asian high being manipulated. Right after we do so, we clear buy side and we start to move down, clearing the sell side resting below the low, which is coincidentally Asian low. What do we do afterwards? Well, we mitigate a block and this is essentially the price action leading to the event. Okay, so we had the two sides manipulation leading into the event, and now we're at the FOMC statement. Okay, when it releases, what do we see price do? We know, and this is the crucial thing, that if price is gonna go down with FOMC, it is more likely first gonna push up. Okay, it is far more likely for price to go bullish first if it's going to go bearish, right? If the expansion is going to happen in the bearish side of the marketplace, we're first going to push up looking for buy side liquidity. And this is the important thing. You're not waiting and trying to sell as the candle is bullish over here pushing up. You're waiting for your objective to be captured. And in this particular day, your objective could have very well been this high, could have been the Asian high. You're essentially waiting for buy side liquidity to be captured. Once you see that happening, you're waiting for rejections or whatever you use as confirmations to take the opposite trade. But it is crucial that you understand that price will not go down until buy side has been captured, okay? And this is exactly the buy side that we cleared. We took the high, we took the Asian pull, we mitigated the block on the left, and then we started moving down. Only then, because at that point we had buy side liquidity being captured. It was not going to do this and this. Okay? Now, if the event would have pushed price lower, meaning, higher, meaning the event, including the press conference, would have pushed price in that direction, we would have far more likely first have pushed down, and you can see that I was prepared for that scenario too, which is the grabbing of this low, the clearing of sell side into the extended buys at that point. So if price would have dropped with FOMC, I would have been looking for the low to be purged. Once that happens, I will then look for the buys if confirmation is present on the lower time frame. Okay? So keep that in mind, guys, for future news events. This is of vital importance. For major news events, you're gonna find more often than not that it is first gonna push in the opposite direction of the actual move. It is gonna seek buy side or sell side, depending on whether it's moving up or down, and then only then, when the pull has been cleared, we can then move in the opposite direction, right? And you may ask yourself, why is that? Well, it's because that's how the markets book. Whenever you find any significant reversal in price, you will see that it only occurs once the pulls have been purged. Once a previous high has been traded above and then we trade lower. Once a previous low has been traded below and then we trade higher. Okay, it's how the markets work. And I will show you more examples of this in a bit. But for now, just understand that bit of information. The reasoning behind it is because we know that once again, what's happening over here in price, when we talk about this specific scenario of buy side liquidity being captured, is fairly straightforward. Anyone that was selling the market in this leg over here leading to the event, anticipating FOMC to price Euro USD lower, has now been stopped above the high, because there's going to be resting stop losses above the high, right? There's also going to be lots of um, traders that are going to initiate and go long above the high, especially when you see this big momentum candle. Traders are far more likely to be taking longs above the wick, anticipating that this is a breakout, this is bullish structure, a market trading above highs is seen as a strong market. We should continue pushing up. But what they don't know is that the market is only moving up there to tag them in, relieve smart money, and allow them to sell from a better price point. It's just logic at this point, right? If we want to drop Euro USD lower, why would we do it over here? This is where the event started, with this big bullish candle. Why would we do that over there? Why not push price up, take everyone out, clear buy side liquidity, allow us for better entries, make sure nobody is selling? Because trust me, do you think is selling on the event, on the FOMC release right over here after this big massive bullish candle? Who is doing that? Ask yourself that question. No one. And that's why it's a good idea to be looking for the shorts that I took advantage of. And that was that. It was very simple trade. It had a beautiful 1 minute break in market shift that allowed you to enter beautifully, right? Because I'm not selling as the market is pushing like this. I'm not selling here, I'm not selling here. There's no reason to do that, right? There could be a reason to be selling as we clear the buy side on the left and we start pushing lower. But if you look closely, the closest swing respected being over here holds, right? We drop lower, yes, but we respect the bearish, the bullish block here, and we must push further up. At that point, we've not only captured buy side above this high, we've also traded above an Asian pull. We've now printed a beautiful bearish big candle coming down, breaking below the range, and this is your entry right here. The return into the lows on the left, right over here, right? You're taking an entry right there, and you're anticipating price to push lower because you have beautiful reasons to believe that. One, we're at a very high volume time with FOMC being released. We've cleared buy side liquidity. We know that the press conference, which starts 30 minutes after the actual FOMC statement, usually moves price in the opposite direction to the statement. We have that in confluence. We've now seen the intention in the market with a strong bearish momentum candle. So as you get this return into the imbalance fail, which once again, you're looking at this entire area from the wick high to the wick of the bearish candle right over there, right? And let me highlight that for you a little bit better. You're looking, let's do this. You're looking at an entry anywhere within this region with your stop above the high. Very, very simple trade, very successful at the same time, right? And once again, I will show you another trade that I captured today doing the exact same thing, waiting for buy side or sell side to be cleared and entering the trade upon traders being stopped and traders being initiated in the wrong direction. Okay, so that was the Euro USD idea. At the same time, if price would have pushed lower, I would have done this exact same thing. I would have seen the push lower. I would have waited for sell side liquidity to be captured. I would have waited for a market shift, and I would have entered on the return of the imbalance, right? Whether it would have pushed into the sell side below this low or the sell side below this low, you don't know that. You don't need to know that. You just wait for your confirmation below the liquidity or above if it's buy side, right? Should understand that very, very easily. Great concept to be trading and beautiful understanding of how the markets really do what they do. Now, let's go back to gold because we also spoke about it in the Zoom session, and the idea was the very same. Buy side liquidity being rated. You look at the lower time frame over here. Um, you're looking for direction, or not direction. You're looking for intent as the market clears buy side, not before it. Okay, very, very important concept to understand. So we see that buy side liquidity gets captured over here, 1667. You get intent with the big bearish candle. You look at the following candle, you see the imbalance region. You know that you need to be short anywhere over here. Okay, in this box, you're looking to go short because buy side has been purged up off the high after a minor consolidation during a big volume event where everybody's going to be following price, chasing price, going long, and you're waiting for the press conference, which is right over here, 1830, like clockwork, and we push up, rate the high, drop down, show intention, return back into the imbalance fail, and at that point you're then just riding the trend, aiming for sell side liquidity on the downside. Very simple module and very simple way to actually be trading. Now I will show you one more thing before I finish this video, which is the buy that I took today on gold as well, that I shared as well over here below the low. Okay, we're not going to be getting into the actual entry, but once again, and I'm not saying that I captured this entire thing because I don't need to, but what I did do is as we trade below the low, which once again is visible on the 1 hour time frame over here, sell side liquidity being captured just by a tiny bit, that's sufficient enough. We see that being captured. We see the shift in market intention. You enter on the imbalance return and you target buy side liquidity, which in my case in this scenario was 1624, which gave me roughly 50 pip move in a few minutes, right? Very, very simple. We can see that we've now returned back into the breaker on the lower time frame right over there. So there could be an opportunity for a short right over here, which I'm not going to take because we're moving into market close. We have NFP tomorrow, and I expect price to range now for the FOMC event, where I will be looking for the very same idea, right? If NFP tomorrow comes out and we drop massively, below the sell side liquidity, the next pull that's visible on the higher time frame, I will be looking for a long below the sell side. Okay, so keep that in mind. Now, with all that being said, that's everything that I wanted to share today. We went over the FOMC event, why price did what it did, what was expected, what did we speak about on the Zoom session. Those in the private mentorship know that, and the actual result with the event. Okay, so keep that in mind. Keep the idea of waiting for buy side or sell side liquidity being rated before you look for an actual entry. Very, very crucial aspect to your trading. Now, with all that being said, guys, I do hope you enjoyed the lesson. I did try my best to provide you with the information. Study the charts, look at the FOMC event from last time, the one before that, and you will see the same things repeating. Whether price moves up or down, it more likely will push in the opposite direction first, aiming for buy side or sell side, depending on whether it's pushing up or down. And once it has captured that, once the objective has been met, you can then look for a confirmation pattern on the lower time frame as an entry point. Okay, very, very straightforward information. So thank you very much for listening. I hope you enjoyed the lesson. If you actually did enjoy the lesson, feel free to drop a comment suggestion with future potential videos. Drop a like, it helps with the YouTube algorithm. You can join the mentorship by clicking the link in the description. Anything else that's not the IPDATrader.com website is not me, and they will scam you. So keep that in mind. Thank you very much for listening, and I will see you guys very, very soon. Take care, everybody.